Hi everyone, welcome to my channel. In this video, I'm going to talk about commercial property strategy. So this idea actually came from when I was talking to one of our potential clients and we were understanding about the situations and how we can help them. So as you know, my name is Soumen Mondal. I am a commercial buyer's agent. So regularly I talk to different people who wants to become financial independent and we give them a kind of a property strategy, particularly commercial property. So this video is going to help you to understand one of the strategy that we put together to our clients. And more importantly, if you are in this same bracket, hopefully you will be able to get some value out of it. So let's start. All right, so I was talking to these potential clients and their situation is something like that. They both like husband, wife, and they both have a high paying job. Like high paying job in the sense both of them earning about $200,000 annually plus, like more than $200,000. And then both of them are happy to what they're doing. They are not thinking of retiring in next 3 years, 5 years, and not any time. They also have a good lifestyle, which means they travel extensively and they want to remain in that zone. So it's not like that cutting down income and then cutting down expenses. They don't want to do that. So their goal is to have that job, keep doing this. At the same time, they want to build passive income. And then one day when they realize that yes, my passive cash flow is enough, then they will decide what they are going to do. So that was the background. Now they, as I said, they travel quite extensively and both of them having a good income. The second point is like they have two kids, like one is 8 years old, another one is about 12-13 years old. So both of them are actually into schools, and of course they are planning when they will go for the unis that expenses would be also covered from this passive income. So that was another point that we talked about. So in this situation is because both of them are high paying jobs. So this is the strategy that we put together. Before saying that, let me put it about their situations also. Is not only they have the income, high paying income, and they came to Australia as a migrant and about 6-7 years ago, and they bought in between time, they bought 4 residential properties. The way they stacked up these all 4 residential property in their own name, and then one by one they bought. And once you bought one, then second, third, this way they have bought 4. And right now their situation is that they have maxed out their borrowing capacity. So in other words, they perhaps can squeeze one more residential, but after that pretty much their borrowing capacity will be stagnant. So in other words, they can't borrow anymore. The reason behind that is that all 4 properties right now kind of not generating enough cash flow. Because there is not generating enough cash flow, and as you know that residential properties in general, it's like a growth style, and it's not giving enough income, and the expenses becoming more and more, and if it continues, then literally is not making enough money. So this is the situation, and they bought these 4 property. Out of 4, that one is in SMSF as well. So they set it up that SMSF and then they bought that property in SMSF. So what we have actually done is that we have give them a strategy which can work because they don't want to retire now. So we paced it out like about a 10 years horizon. So this is exactly that we have done. We told them that you buy one property, which is commercial property, on year 1, and then at the same time year 2 or 3 you will buy another commercial property, and both of them between $1 to $1.2 million. Now here is your first question, that you just said that they are not going to get the borrowing capacity. They hit their borrowing capacity, and perhaps they can buy only one. How come you can strategize to buy 2 commercial property within a year? And here is the magic. Because these commercial properties are positive cash flow, there are ways to get qualified to the loan, even from the big 4 lenders. They are going to lend you if you buy a positive cash flow. So the strategy is within a year 2 commercial property, $1 million, $1.2 million, and then within 5 years time 1 commercial property in SMSF, and between 4 to 6 or 7 years around that mark they will buy 1 more commercial property in outside of super. So technically within 5 to 7 years time, what they will end up having all 4 residential properties which they already have plus 4 more commercial properties. And this is how what we planned out, how it is going to be done. Remember what they have said, that they do not need any income right now. So what we have put together, what we call is a 100% commercial property loan. Now remember I told about they all have about 4 properties, 4 residential properties, and those they bought it in the last 4, 5, 6 years. It has gone up whatever percentage, so there are some equity. So what we have actually put together, that we first set up one family trust for them, and if they set up the family trust, under the trust they are going to buy that commercial property. So the property is not in their own name, it is going to be in their, the strategy would be mostly into a separate entity. Buying that, what is happening is that the loan is not in their name. Loan would be in the family trust or unit trust, or you could think about the commercial company, but in this case is their family trust. They want to set it up and then take that whole 100% loan in that family trust itself, and for that the lender wants one of the residential property also with them, because they want to see, they want to assess and all, and tap the equity. So the home loan remains, or investment loan for the residential property remains as it is, but the 100% loan would be with the commercial property in the family trust. Now if you don't understand that part, by all means go to our website www.mlina.com.au and book a free strategy consultation, so that way our broker can actually help you to understand how these things work. But for now, think about that it is possible to get 100% loan. Now 100% loan means right now, let's say the interest rate is around 5.7, 5.6, around that mark. So if you get a 6% net return property, then it is going to be a positive cash flow even with 100% loan. And that is exactly what we propose to them, because then today, yes, they acquired the property, did not give enough cash flow, it is giving you very nominal, but they don't need it now and they are tying up with one. So like way, we have also put together another property with another trust, another kind of a residential property tie up with another lender, and pretty much creating a 2 family trust, 2 commercial properties, and both are with one of those residential property tie up and 100% loan. Okay, good. So far you are with me. Then the SMSF. Now both of them, as I said, that they both are working as a high paying job, 200,000 plus annual income, which means that they could push their $30,000 of super into their super. Now this is something that I asked them to talk to their accountant and make sure that get the proper tax advice and get that as much as possible. Now assuming that they did and they are following this, then that means 60,000 every year they can put into SMSF. Now 60,000 into 4 to 5 years is around 300,000, and if they do a smart strategy a little bit, this could go up to 350, 400,000. Now as soon as their super is around 350, 400,000, that is a perfect time to buy another commercial property which is like between 1.2 to 1.5 million dollar. They would be able to qualify because most of the tier 2 lender would be able to lend you with like 70 to 80% into SMSF, and then that becomes their third commercial properties, which is like within 5 years. And then as soon as that is done, remember every year they both are earning, there's some surplus, and those 2 commercial properties not losing money, so literally they will have more surplus. And then on the 5th or 6th years they will buy another commercial property, and with the equity of the other residential properties. Assuming these 5 years, they will get some sort of growth in the residential properties and also some sort of growth in these commercial properties as well. And again, the third property, it is going to be a separate trust, separate lender, and it is going to be tied up with another residential property. Now after 5 years, what you see is that they do not get enough cash flow to retire, right? This is the strategy that we put together. But this is exactly what happens if they decide by then, and assuming this all commercial property is giving 6 to 7% net return, then they bought 3 commercial properties already, and that gives them a chance to decide if they quit, or one of them actually slow down, want to retire, want to do something, then at that time they might decide to offload some of like 1 or 2 residential properties. And as soon as you offload, you pay off that debt or keep that money in the offset account, and suddenly it's going to become a good amount of positive cash flow to live off from that income. So that is exactly the strategy you are doing. Now the choice that they have is that to decide when to do that. So the goal right now for the next 5 to 6 years is to accumulate those assets, and from there they will decide whether they want to go for it or they want to just keep pushing it further. Maybe their fourth and fifth property they would be thinking. But for now, we locked in 5 to 7 years of plan, and this is exactly we are going to execute and make sure. So we have finally they understood this, so we end up signing off that buyer agency agreement and we are proceeding for this plan. So hopefully it gives you an idea about how we strategize, because commercial property is not only just about buy a commercial property, is about to have the strategy, and once you have the strategy, then you think about how you can implement the strategy and be strict with that. I hope you get some value, and if you are in this situation, by all means you can do this too. But if you are not, there are some other strategy that can be employed as well. By all means go and watch my other YouTube videos. You might find that it is interesting and it is possible that how this can happen, based on your circumstances, situations. By all means, doing things is going to make you much better position, but not doing. Hope that stick with you. Thank you so much, and I'll see you next time. Bye bye.